Hey, what's going on? My name is Zach, and today I would like to talk about different loan programs and different down payment requirements. So there's a lot of misinformation, and I think this really comes from like my parents' and grandparents' age when home loans were a lot different. But here in 2026, things have definitely changed, and you need to be aware of what it takes to get into a home, what it actually costs, and knowing this will set you up for success. For some people, renting may seem like that's all they're ever going to do. And for some, let's face it, it's true. That's all they will do because they don't take the steps to prepare themselves for home ownership. And that's okay. Not everyone should be a homeowner. I hate to say it. I know it sounds harsh, but it's just the reality of it because home ownership comes with responsibility that some people, quite frankly, aren't ready for. But let's dive into the down payment requirements and how that has changed. So back when I was growing up, I always heard you needed 20% down to buy a home. You needed 20% down to buy a home. And that is not true. How has that changed? Let's break it down. Conventional loan programs can take 20% down, and then you won't ever have to worry about mortgage insurance with that. That's great, but not everyone has 20% down. So for a conventional loan, if you are a first-time home buyer, depending on the property you're looking at, you may need as little as 3% down up to 5% down. I'm going to say that again. Conventional loan can start at 3 to 5% down. You do not need 20% down to buy a home with a conventional loan. Yes, if you put 20% down, you won't have mortgage insurance, but again, not everyone has that kind of money sitting around. Number two we'll talk about is an FHA loan. An FHA loan is the Federal Housing Administration program. It requires 3.5% down. The catch with an FHA loan is that you will have private mortgage insurance for the entire life of the loan if you only put 3.5% down. But it is a great loan program to start building wealth through real estate if that's what you fit into. Number three I'll discuss is USDA. USDA is 0% down. Now this is for rural areas. Some locations are excluded from this and others you're eligible for. It does have strict credit requirements. It does have strict income limitations. And again, this is for rural areas only. Then if you're a veteran or eligible surviving spouse, there is the VA loan, Veterans Administration Loan. This is a 0% down loan. There is no private mortgage insurance. It typically has a little bit lower interest rates than some of these other loan programs, and it is phenomenal for those who have served or their eligible surviving spouses. Now, there are some first-time homebuyer programs out there. Often what we refer to as DPA, down payment assistance. Now, these down payment assistance programs can be beneficial to you, but there's always a catch, right? If their bank is giving you money for your down payment, there's always a catch. There's no such thing as free money, right? No such thing as free lunch, whatever you want to say, depending how you grew up. So what are some of these catches with these down payment assistance programs? While they are great, you need to be aware of them. Some of them will come with what we call a silent second mortgage, meaning they're going to give you the money, but they're going to attach a silent second mortgage onto that property for the amount that they gave you. Now, when you go to sell or refinance that home, that bank's going to want their money back. So again, they give you the money now, you're going to have to pay it back later. Hopefully you could do that with the equity in your home if you don't sell or refinance too soon. The catch to that is if maybe you close at a 7% interest rate and rates are down to 5, you're going to want that lower interest rate to save on your monthly payment. But if you don't have the equity to pay back that money that they gave you, you're going to be stuck at those higher payments. Now, there are programs where they give you a grant. Now, the catch with that grant, you're going to have to stay in that mortgage for a certain specific period of time. Depending on what the program is, it may be 5 years, it may be 7 years, maybe 10 years. It all depends. There's over 3,000 down payment assistance programs in America right now, and each one's going to have a different catch to it. So, these are a few programs out there that are eligible for home buyers in America in 2026. If you want to see which program you fit into, reach out to me. I will give you a no pressure consultation to go over which program you may fit into. My name is Zach, and I cover 48 out of 50 states. The only states I cannot currently help in is Utah and New York, but I'm more than happy to assist you on your home buying journey in any other of those 48 states. Thank you so much.